Hi, my name is Alex CARLUCCI with Gustan Cho Team. I want to talk to you about the 5 different types of mortgages that we have here. Let's start with the most popular is our conventional. That's where most people want to be. If you can get a conventional loan, you want a conventional loan. It's usually the best deal. VA is probably a better deal, but conventional for the average Joe, if you're not a veteran, conventional is what you're looking for. So lately, you need like a 660, but prior to COVID, 620s were going off on the computer. They're getting approved. Now the computer's tightened up since COVID for the last year, and I'm seeing like 660. Sometimes the 640 will go up, but the 620s are not going off like they used to. So it requires good credit, but there's no upfront charge. And the PMI will fall off if you're not putting down 20% after you've paid the loan balance down to 78% of the original purchase price if you don't want to refinance. So you have to wait until you pay that mathematically down. That takes about 9 years with a 5% down loan, maybe 4 to 5 years with a 10% down, and maybe 2.5 years with 15% down. But when you mathematically pay your loan balance divided by your purchase price, when that's at 78%, your mortgage servicer will drop the PMI. Now, if your next loan that's most popular is FHA, so if you got low credit scores, or you need high DTI loans, or you need some trick that FHA allows for, then FHA is a great product. We do 3.5% down. It's got the same PMI for every single loan. It's 0.85 for 4.99% down or less. It's down to 3.5% down. You put down 5% more or greater, it's a 0.8 factor. So the PMI never changes from that rule. It allows for a lot more sketchier credit situations. It allows for a larger closing cost credit. So if you're buying a $120,000 loan and you need all $7,000 credited, it'll allow up to 6% closing cost credits, where conventional only allows 3%. So FHA is the second best product, I think, the popularity. And then the third most popular product is a VA loan, but you have to be a veteran. No money down, there's no PMI, and if you're exempt from the funding fee, there's no upfront charge. Like FHA's got a 1.75 funding fee, or MIP they call it, and VA's got a funding fee unless you're disabled vet, and then you're exempt from that funding fee. So another thing good about VA, if you are 70% disabled, most counties in the country will not charge you property taxes. So your property taxes may be very little or zero. When you know a $7,000 a year tax bill, you're going to pay $0 or maybe $250 a year. You have to check your county, call your assessors, but that's a great deal for veterans. And again, the 0% down with no PMI is a great product. Our next most popular product is non-QM. So in our non-QM loans, we do bank statements, we do no income verification for investors buying an investment home at like 20-25% down. They don't verify any income. The rent has to cover the mortgage payment. It's a great product. Again, the bank statement loans, when you write off all your tax return income because you're self-employed, but you show tons of deposits, we can go off a certain percentage of those deposits as your income. We have a couple other unique products that we do with the non-QMs, but if you want to call me on that later, we can talk about it. But it's mainly meant for self-employed borrowers or 1099s. 1099 is a great product for the non-QM. They'll use 90% of the 1099. So if you write off all your expenses off your 1099 to $0, we can just show your 1099 and do 90% of that, and that'll be your income. And again, these non-QMs, they do come with higher rates, higher down payments. Nothing better than 10% right now. So if you got a 720 credit score or better, you're probably going to get 10% down from 660 to 720. It might be 15% down. Below 660, you're looking 20, 30, 40% down the farther you go. So again, they come with higher rates, but definitely they save the day for a lot of people that can't show their income. And then the fifth one is USDA. Don't do a lot of those, but they do come with zero money down. They do have income restrictions. They do have availability of money in your county problems, so you got to make sure there's money available in that county for a USDA loan. They do come with very low DTI, so 41%. And again, the income restrictions, if you make too much money, you're not eligible. And if you're over 41 DTI, you're kind of out of luck. But it is no money down. The rates are okay, so that's our fifth product. So any of these products sound good to you that you might want to use, I want you to give me a call. We do mortgages here. My phone number is 630-915-7550, and please subscribe.